everyone, and thank you for joining us here again at Inside the Deal, Healthcare VCs to Watch. As you may know, this video series is focused on spotlighting investors who are really focused on supporting healthcare innovation and digital health companies with both their money and their expertise. I'm Carrie Nixon. I'm the founder and managing partner at Nixon Law Group, where we help healthcare innovators every day navigate the legal and regulatory complexities of the U.S. healthcare system. And today, I'm delighted to be joined by Sal DeTrane. He is the founder and the managing director of Empactful Capital. And I know that prior to founding Empactful, Sal led growth strategy for a major health tech analytics company. And because I know his background as an operator before an investor means he is going to have some really interesting insights, I'm excited to start this conversation. So let's get right to it. Welcome, Sal. Thank you so much for being here.
Oh, Carrie, thank you for having me today.
So Sal and I have known each other for a number of years now. We actually met through a deal that he was doing. And in full disclosure, I have to let you all know that I am a special advisor to Empactful Capital. So I, of course, am totally biased and think the world of Sal and of Empactful Capital. But I thought this would be a great conversation to have because I know Sal has some great insights. So I'm going to get started with a couple of really basic questions that I think our listeners will be interested in. So, Sal, you founded Empactful Capital a number of years ago now, and you're focused not only on healthcare, but on sort of three specific areas, even within healthcare. So I'm interested in knowing what really motivated you to start Empactful Capital, and why did you decide to focus on some specific areas?
Yeah, that's a great question. So this is actually V2 of this same model. We had started a similar type of firm in the early 2000s. I began my career on the East Coast, but quickly moved to the West Coast. So I've been out in the Silicon Valley area for the last 30 years. So in around tech innovation for literally 30 years. From the early days of when the internet and extranet kind of analogies were being used as new terms. And so it's been really cool to see how software data models and analytics models have evolved out here as well as across the country. And so I actually left that firm, Nucleus Partners, to go to one of my portfolio companies where I got 12 years of operating experience, a company called Medi Analytics that you alluded to earlier. And so that was really my first introduction into mainstream healthcare, serving hospital systems and then eventually health plans as to their growth and progression. And what we saw through a lot of the data and analytic work that we did with these organizations, we really found there was a number of gaps in how they thought about reimbursement and payments, how they thought about behavioral health, and how they thought about other areas of engagement of members and employers. And so a lot of that really shaped our formation of Empactful. So after we successfully sold Medi Analytics on our way to going public to Thoma Bravo in 2015, about a year later, I left Medi to found Empactful to really follow up on a lot of those insights and observations of where healthcare needed to go next. And that really was what formed our thesis.
So the fund is named Empactful Capital, right? And I think it's very purposefully named that way. So how do you define impactful investing? And by the way, it's impactful with an E and not an I, but still, I think the connotation is there, right?
Well, that's very intentional that it is an E versus an I, in fact. So the E or the, kind of the EQ element of it is really having a higher EQ and empathy for how hard it is to build companies. So it's meant to be both impactful from an entrepreneur standpoint and impactful from a healthcare standpoint. And the second piece of impact is really how we work with companies and impact healthcare as well, but help them on achieving milestones that are really critical on their growth trajectory. And then the last piece of the capital in the name is really intentional as well, around really providing the right amount of capital at the right time, not too much or too little. And we've seen both where people underfund companies and where they overfund companies, as you've seen as well, Carrie. And so We try to live those three connotations to our name and every day and how we interact with our companies. Also companies that we're evaluating for investment, and also how we work with co-investors as well.
Yeah, that makes sense. So you talked a little bit about the importance of investing the right amount of capital in a company. VC funds as a whole can vary significantly in the amount of money in the fund overall, right, that they have to deploy. And they can vary in the number of portfolio companies that they're supporting. So when a founder is looking at different venture capital funds and considering investors, if they're looking at sort of one of the mega funds, right, with many millions or even billions of dollars in a fund, and versus a smaller, sort of more targeted fund, I would say, like Impactful, like what do they need to think about in terms of coming to the right fit for them at the right stage?
Yeah, I think it's really important to know where you are in your progression. And there's benefits to going with both types of firms. It just really depends on where you stand in your development as a company. As you talked about, there's many generalist firms who don't have healthcare experience. So, I mean, you really need to know if you really want a industry firm, that's a very different proposition than a generalist VC or PE firm who do have a specific focus in healthcare and maybe industry experts and operators and the like. The second thing is going with a VC firm versus a private equity firm, right? A growth equity firm. The differences being that most of the private equity firms and even some of the VC firms are multi-billion-dollar funds. So they have to deploy at least $40 million into a company for it to make sense. On the VC side, they're investing in 20 to 30 companies, in some cases even more. And to meet that goal, if they have $1 billion fund. So we've chosen to take a different approach, which is the remaining micro fund. So let's say sub 250 million in total commitments or fund size. And that allows us to focus on a smaller number of companies, to be more intimately involved with those companies and to try to have a higher impact on their growth and trajectory. So we'll invest in anywhere from 8 to 12 companies per fund. And so it allows us to sit on fewer boards, to be more involved. We have 4 managing partners, and even with 4 managing partners, it's difficult to sit on more than 3 or 4 boards at a time if you really want to be involved in those specific companies. So we've chosen an approach which is a micro fund. And I think for entrepreneurs, you need to decide what type of investor you want, because a micro fund can size up to be able to support your overall capital needs, but also how much capital you're going to need along the journey. And for all entrepreneurs, I mean, it's a simple equation. The more capital you raise, the more dilution you take, and especially in the early days. And so the ability to get through on less capital to those milestones is very advantageous to firms like ourselves because we have a smaller fund, but also very advantageous to the entrepreneurs themselves because that means less dilution on their part. And it allows them to get to a later stage of getting to a more of a mega fund growth equity type of player where they pay higher valuations and they're looking at really helping you at that next phase of your progression towards maybe if you want to make some acquisitions or you want to invest in building out your sales team or, kind of being able to develop the next layer of your platform and the like. And so as you think about those sort of stages, it's really important to align yourself both with the amount of capital you're raising and the type of firms that you're talking to in those associated Series A, Series B rounds, or even a seed round.
Yeah. And in my involvement with Impactful, I have noted sort of the really hands-on approach to the team that the team from Impactful takes with companies to be incredibly useful. I know that a lot of the folks on your team have really significant connections in the healthcare industry that can help these companies along the way. And, I think I think that probably is very important for companies that are kind of getting off the ground and sort of in the initial phases of growth, for sure. Maybe, later on, as you point out, that hands-on approach maybe isn't needed quite as much. But I've been impressed in how you implement it at Impactful, for sure.
Yeah,
So
I
yeah,
was just going to say clearly there is a capital gap that has emerged between VC and traditional growth equity, and that's where we're focused. Companies that have reached a certain level of commercial traction, give or take 5 million or greater. And then there's a big support gap. And so that support gap is equally important for entrepreneurs to truly understand the type of investor. Can they deliver on what they're asking, whether it be company building experience, operational experience, the ecosystem of relationships that you've talked about. But also, it's important that in my opinion, it's important that they have operating experience, the investors too, because it's really hard to have the EQ or empathy that we talked about earlier if you have not, run your own companies or started your own companies and been there and been in the shoes of the entrepreneur as well.
yeah, as a founder myself in, the legal services space, I can absolutely relate to that. You don't quite understand it until you've done it, for sure. So, given all of that and given your experience in the space, you know, from what you have seen and from your perspective, what does it really take to build a health tech startup that is going to last in the long haul?
Yeah, it's a combination of a few factors, a few that I'll highlight. One is, a great team of folks who are super resilient and are also aggressively pursuing growth and milestones, but at the same time patient in understanding that healthcare, it just takes longer in healthcare to build a technology business than it would in, say, financial services or retail or other industries, in terms of sales cycles and the like. And so often, it's really who you have on the team and their experiences and their prior failures and lessons learned from those failures and also their success. Because I think it's really hard if you've not seen a successful production of a movie before, right? To produce a movie, if you've, kind of, even if you were part of the team, maybe not at a C level executive position, but part of the management team of a successful exit and what it took to get there and the like. So really the team, it starts with the team, and yeah, I can go emphasize that for the next 5 minutes, but I won't do that. The second thing it really gets into is really very clear specific milestones around your go-to-market strategy and how that relates to your product roadmap, and really being clear on those are likely to be, along with the team, the biggest uses of the proceeds. And so really well thought out execution plans, not just financial projections and numbers of what will happen, but how do you get there? How do you get from point A to point B on your go-to-market strategy in areas such as pricing strategy, which are incredibly strategic. And, the wrong decision could really elongate your sales cycles, or ultimately have false positives where you're closing a volume of deals, but you don't have minimum revenues in those deals or things along those lines. So we often see these little things that appear to be little, but end up being really important decisions along the way relative to pricing, how you contract with your clients, and the way in which you think about, kind of a growth orientation or partnership with them. And then the product, I think, it's also really important to have a very clear viewpoint on how are you going to continue to grow the business through greater and deeper value propositions. We like to work with our companies on whether they have a workflow or software, data analytics, core value proposition. What's the next stage that they're able to kind of progress that through, whether it be a tangential value proposition that moves into a new market, but ultimately is there data and insights that they can provide to their customers that they are uniquely qualified and the only party in the marketplace that can provide that insight. You're golden at that point. You will be the best friend of your clients. And we've had portfolio companies who've reached that, And their clients literally say to them, we won't beat you up on price anymore. If you can deliver this for us, that insight that we can't get out of Epic or can't get out of our claim system or whatever it may be, well, then you're a partner for life kind of thing. And that is a unique, space to be able to fill. And if you can get to that level of value proposition, both with your product and your overall delivery and value proposition to your clients, it puts you into a very unique place in the longevity of that relationship.
Yeah, you're golden, right? That's exactly what every founder should be striving for sure. Okay, so as I understand it, you have recently added consumerism in healthcare to sort of your investment portfolio, and you can talk about sort of the other two, investment lines that you have as well. But I'm very interested in sort of how you decided on each of these sort of investment areas, and right now, like why do you see this as the right time to focus on consumerism in healthcare, and sort of what does that mean to you?
Yeah, for sure. So I'll come back to that. The first two areas that we started with were behavioral health and how it needs to be fully integrated into value-based care and the path to value-based care. How does healthcare, in a transformative way, move to this new reimbursement and payment model? And there's obviously been lots of fits and starts over the last 15 years that we could do a whole podcast on as well. But finally, we're reaching a truly a breaking point in the healthcare system. So as we think about those two markets, we still think they're very vibrant. To be very open, behavioral health has been an area that had been we were early to behavioral health. In 2016, we made our investment where really no one was investing in behavioral health. So with each of these three areas, we're really looking to see around corners or when, kind of where the market is going or skating to where the puck is going to be. That's our job as venture capitalists and working and finding those entrepreneurs who see the market similarly and are bold enough to start a new company in those particular areas. But behavioral health has been one that we had a lot of great success early on in Fund One, and then we've been searching until last week. We actually made another behavioral health investment because we were looking for version 2, version 3 of telepsychiatry and and where was that market going? And there had been so much funding and frankly overvaluation of a lot of the companies that had to settle out over a period of time. And so we went deep on a number of companies, but ended up holding off until just very recently. But we think there's lots of opportunity that's emerging in the behavioral health space. And then the path to value-based care, there's many components of that. And we could take a lot of time to unpack that. But how do you think about provider networks? How do you think about contracting? How do you think about, unique ways of picking partners of who's going to be under a value-based care contract versus otherwise not? And how do you adjudicate those contracts and make sure that payments and reimbursements are appropriate and the like? And so there is a whole level of decades-long innovation that's going to continue on in that area. And that's why we continue to be very interested in that space. And I'd say the same applies to the fully integrating behavioral with physical health as well. So getting to your question around consumerism, we really think that, with high deductible plans continuing to grow and not going away, right? I mean, as long as employers are in the market, and also as you think about Medicare and other types of situations, there is a patient portion that or a member portion that's grown from hundreds of dollars to tens of thousands of dollars. So if a family is spending or covering the first $30,000 of their own healthcare, they're going to be a consumer and they're going to consume it and make choices and all types of things that healthcare has not been oriented to solving for or making it a mechanism of how they engage in the system. So whether you think about it from the provider or health system side as patient engagement, or you think about it as member engagement from the health plan side, that word of engagement has been elusive for any of those organizations. And so we're working with a lot of really innovative companies who are bringing new models that are proven in other industries, such as retail, hospitality, and other areas, around how do you build a loyal, engaged patient or member. And that is, I think, the future for these large incumbent organizations, especially when they're under a sale from the Amazons and the CVSs and others of the world who know how to engage consumers. And so, it's not a status quo is going to be okay for the next decade. So we really see this as a tipping point on that particular area of consumer centric healthcare, consumerism, of how data technology can be applied to the business models of these organizations to help them step into the 21st century of the way in which they need to interact with their patients and members to truly make them loyal.
Yeah, I think that's true. I think, a lot of consumers and patients would like to do more things around their health than their healthcare plan typically allows them to do, right? Maybe they would like to focus on prevention. Maybe they would like to really focus on, wearables and sort of monitoring their various physiologic metrics in an effort, to control a particular disease state, right? And sometimes those things are covered by health plans and sometimes they're not. And I don't know. I think that you're right that, consumers are going to want and expect more from their health plans than they're going to be able to get, with sort of just these high deductible plans. So I think that's a smart shift.
Yeah. I mean, you could look at GLP-1 drugs as an example of that right now.
Yeah,
Is there something you need to do in advance of that, like nutrition, dietary meals and things like that you
absolutely.
have to go through first before you have access to GLP-1s? And then what do you do to have someone come off of GLP-1s? What is the off ramp of that? So there's a lot of those types of issues or opportunities that exist in healthcare. And I think that's the beauty of healthcare is there will always be things and problems, issues that emerge that need to be solved for to make our system both more effective and more affordable.
Yeah, that GLP-1 example is sort of the perfect one, right? It is far from an untapped opportunity, right? It is almost everywhere you turn these days on the internet. And oftentimes it's not supported by nutrition and exercise support. So that's kind of an issue. But looking to more untapped opportunities, and particularly in the three focuses that you all have at Impactful, what is the most untapped opportunity that you see as we're sort of heading into 2026?
Yeah, I'd actually still come back to all three have untapped opportunities. So behavioral health, the path to value-based care, and consumerism. We're seeing a lot of interesting plays between where there's an intersection or part of those, all three of those circles touch. So for instance, the behavioral health company we just invested in, they have a large care navigation element to what they're doing, sort of to make sure that the patient is being directed to the right place as opposed to just, trying to get access for them, and so there's a lot of considerations on the logistics of how healthcare is continuing to be done. There's huge opportunities of how you leverage machine learning and AI to just prioritize and bring a refined automation and approach to a lot of these problems. Where you're not replacing people, you're actually just making people and helping people, I should say, better work smarter and more effectively in delivering the care and, getting people access to the right care at the right time, at the right place. And so there's lots of opportunities in optimization of just all the spend that actually happens in healthcare. So, but it was interesting that we were visiting recently with a leading academic medical center who is, literally the leader in life sciences and med tech and innovation for hospital systems across the country. And they admitted that they have a lot of innovation that occurs, healthcare software, healthcare technology within their organization. They're not well set up to commercialize and or consume or bring in other ideas from the outside in versus spinning things out, where they make more money than most health systems in the country from the patents they have around life sciences and med tech. So it's sort of even within healthcare, there's this whole area of healthcare IT or healthcare tech that is dramatically different than life sciences and med tech, where healthcare has been more innovative than any other area. That's sort of the bright light of healthcare is what has happened in life sciences and med tech.
Yeah, it's crazy to think that sort of a leading academic medical center could go, oh, we're not really sure about health tech. It's like, oh.
Right. And they're, and they've got, really smart people and they have a chief transformation officer. But I think it's just interesting to see when people are willing to admit their strengths, admit their some of their areas of improvement or development. And that's what makes it exciting to continue to invest in this space is that there's so many opportunities to improve healthcare. And, it's such an opportunity to do good and do well. In this particular arena over the next set of 10 years or decades long. And so that when you're raising a fund in this area, you have to think about kind of in 5 to 10 year cycles of where the market's going and is there continuations of that innovation or opportunity as you move forward. And I think there's that in spades in healthcare for sure.
Fully agree. Fully agree. Okay, so you have now been at it with Empactful Capital for about 10 years. Is that right? So if you could rewind, right before starting Empactful, what advice would you give yourself about investing in healthcare and health tech?
Yeah, I think it's just a couple of reminders of things that I probably knew, but you look back over time and who are the founders or the partners that you invest in and pick is critically important, right? They have to have similar values and beliefs. They have to be resilient, despite all that the craziness the world we live in today. And example is COVID. How do you perform through a major inflection point in our history, right? And so when you're raising a fund, you're thinking about, again, in 5 to 10 year cycles, it's a 10-year fund. So, a lot can happen in those 10 years from when you raise a fund to when you close a fund out and been able to monetize all the investments. And so there's that and picking the right partners is a critical part to it, and picking the right co-investors of not just for our fund's sake, but also for the founders you're investing in. When we form partnerships, and we really look at it as a capital P partnership with the entrepreneurs, where we're being very open and direct with them, and we expect the same in return. We need to look out for them of who are the other investors that we bring into that company, because as soon as you do that, it's like you're introducing new people into the family, of that board table, and how the advice is given and what people look out for in terms of their specific interests and or perspectives on things. And so picking the right co-investors or right investment partners is also of equal importance to picking the right companies and founders. So those are the things that I would look at. And I think there's always the measure of just patience. Healthcare is nothing in healthcare is up and to the right. It's there's going to be up and then a plateau, and then it may go slightly to the left for a little while, then it goes back to the right, and then you could have this next explosive phase of growth. At least that's been my operating experience at Medi. We had incredible periods of growth, and sometimes where things flattened out, and we had to recreate the growth opportunity within the business. So I think it's patience, but really being creative and finding those avenues of where healthcare has a lot to offer in terms of resiliency in its market, despite economic downturns and the like. But you often have to be creative as to how you're continuing, as we said earlier, evolving your value proposition and doing important things like that. So picking the right founders, picking the right co-investors, and that level of patience and resiliency are the things that I would really remind myself and my partners constantly, to always keep forefront of our thinking around our investment thesis.
Yeah, it's all about patience with a C in the interest of patience with a T, right?
Yeah, for sure.
Yeah. So this has been an incredibly helpful and insightful interview, Sal. I really appreciate you taking the time. I know the founders and the folks that are watching are going to appreciate it. I'm sure they're wondering how they can best connect with you.
Yeah. So my email is sal@empactfulcapital.com. If there's any other contact information, Carrie can certainly make an introduction as well.
Absolutely. And Sal is super approachable, as is the rest of his team. So I'd certainly urge folks to reach out if they think they have a company that Sal might be interested in. And for the folks that are watching, I hope that, and I know that the kind of guidance that Sal has just provided that sort of goes beyond just looking at a pitch deck, really helps folks to think about finding the right partner for your company's next stage in growth. And for my part, we're here at Nixon Law Group, and we have spent, the last 16 years almost working with founders at all different stages as they grow and as they scale. And, we learn a lot from the investors like Sal that we work with as well. So it's really a pleasure to be affiliated and associated with folks like you.
Oh.
Right. So for everyone watching, if you're curious about additional founder insights, you can certainly see those posted. And if you need some resources on healthcare, legal, and regulatory landmines and ways to avoid them, please check them out on our site or check them out on my LinkedIn page. Sal, is there anything that you'd like to leave us with before we wrap?
No, thank you for your time today. And as Carrie mentioned, I'm very happy to speak with anyone and give them feedback or insights on their business. So really appreciate the time today and have a great Fort.
Perfect. You too. Thanks so much for everyone who tuned in, and please join us for additional conversations in this VC's Shaping Healthcare series. Thanks so much. Have a good one.